It was another solid day on Wall Street. In fact, the S&P 500 and the Nasdaq Composite both achieved new all-time highs here today. The Nasdaq Composite closed above 15,000 for the first time in history. We saw a nice snapback in a lot of those Chinese names that have been giving us a little bit of struggles here in recent months. So that certainly aided the enthusiasm. And we did see the cyclicals tend to outperform more of the non-cyclicals in today's session. So we'll talk about all that, see what it means for our posture, and then we'll get into our trade application example where I wanted to focus on a gambling stock just in front of the upcoming NFL season for a bullish trade idea to the upside. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 24th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below in the description area and sign up for our email distribution list so that way you can be notified anytime we post these videos. We also list at the bottom of those emails what stocks within the S&P 500 are giving us overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. I would encourage you to follow me there if you're not doing so already. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence over on Facebook. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, I've got the heat map pulled up here in front of us for the Market Scholars 1000 watch list, which are some of the most important companies across the planet. And would like to start our conversation right up here at the top. You can see that we have some bright green showing up around this area. And for those of you that aren't familiar with those ticker symbols, be aware that those are Chinese stocks. So Alibaba, of course, one of the most popular ones around outside of Tencent is probably the largest Chinese stock out there, but that's not as actively traded in the United States. Alibaba is, and so that's kind of the go-to name for a lot of folks when they're trying to determine what's going on in China. And so Alibaba was up about 6.61% here today. Pinduoduo, which some of you might not be aware, does have a market cap of over $100 billion. There are a lot of people who have never even heard of this company before, yet it is an absolute monster of a company over in China. It was up 22% today. And then JD.com, one of the challengers there to Alibaba in the e-commerce space over in China, was up 14% today. So some massive, massive snapback rallies. They weren't alone. You can see down below here, Baidu, of course, the Chinese Google is what a lot of people refer to it as, was up 8.6%. NetEase, which is a gaming company over in China, was up nearly 9%. And then Bilibili, another Chinese stock, up 11%. So kind of interesting that when we look at a lot of those green squares there, many of them are associated with China, many of them having been clobbered recently. And we've talked about some of those oversold cluster signals in the emerging markets here recently. Today is part of that reversion to the mean snapback rally. Where it takes us is anybody's guess. A lot of times it does stall out before establishing a new uptrend. But at least the sheer pain that a lot of people were feeling has maybe dissipated a little bit after today's very, very strong rally there in the Chinese stocks. In terms of some of the red that we see on the board, you'll notice that it was more on the defensive side of the equation. So it's kind of the opposite of what we saw when I was last with you on Thursday. Today we saw a lot of the healthcare names actually in the red. Notice here kind of in the middle we've got Johnson & Johnson and Pfizer and Lilly and Novo Nordisk and Novartis and we've got Merck and AstraZeneca and the like. All those big pharmaceutical companies, they were all in the red here today. Then you kind of look over here near the consumer staples, Coca-Cola and Walmart, Pepsi, Costco, Procter & Gamble, Philip Morris, all those were in the red here today as well. Some of the telecom stocks like your Verizons, your Comcasts, your AT&Ts, they were down. And then a lot of the REITs and utilities down in the lower right-hand corner here also in the red. So it's kind of what I was mentioning to you in the intro. Today felt like we were kind of on a risk-on mindset where we saw a lot of the more cyclical areas. Notice all the caterpillars and deers Boeing's up here in the green. The banks were all in the green. We had more of the internet plays. Google, which, by the way, some of you that are premium members saw my Telegram. We were excited to invite Google into our coffee can portfolio. It was the 8th stock that we've doubled our money on in my top-down trend trading class here in the last couple of years. And what we do in that particular class is we sell half of our position once we've doubled our money, and we play with the house's money on the rest. And so Google became our 8th coffee can holding in that particular trading room that I teach on Mondays here today. So very thankful to see Google making its move higher to all-time highs today. We also saw Facebook make a move higher today, as well as Cisco. Of course, the trade that I put on with you guys here in this video on Thursday continued higher, and then Apple and Shopify and some of these other more technology-oriented types of companies. So, it did feel to me like it was more of a risk-on day. Cyclicals really working. Nice snapback out of Chinese stocks, and then all those defensive areas kind of took a back seat here today and kind of gave back some of those gains that they had from last week. All right, let's get back into now the main charts here. And you can see that I've got chart 4B pulled up here in front of us for those of you that are premium members. Remember that that whole chart package is available to you guys if you're a premium member of Market Scholars. So as an example, here's my other platform that I use for my Monday class account. And here's the Google chart where we use chart 1A with a little more bells and whistles on it than some of the charts that you guys see David and I use during these free videos here on YouTube. So for those of you that were curious, if you're wondering what the other 7 stocks were that we've doubled our money on, you can see them up here. DocuSign, Lululemon, Zoom Video, Repligen, Chewy, Albemarle, SNPS, and now Google. So nice little healthy batch of stocks there that's done really well for us. So if you've ever had your struggles as a trend trader and wanted to kind of nail down some more precise rules to help you achieve success in the market, I would encourage you to check out my top-down trend trading class on Monday if you're a plus or a premium member of Market Scholars. In terms of the movements that we saw today, I did want to mention that the NASDAQ Composite did close at 15,019. And as I mentioned in the intro, that's the very first time ever that the NASDAQ Composite has closed above 15,000. Remember, it was just a week ago that we were saying we've got to be a little bit careful with the NASDAQ because it was starting to spill over and started to spend a little bit of time below that falling moving average there. It was a little bit jarring that it kind of unwound as quickly as it did, but it actually boosted right back up equally as quickly. Notice that we've had 4 straight sessions to the upside on the NASDAQ Composite. At the low of that 4-day move there was 14,423. And so, of course, today up and over 15,000 itself. So an absolute surge there in a lot of those technology-oriented areas, some of those mega cap tech stocks like your Googles, like I mentioned before, and your Apples and your Microsofts. Those types of stocks seem to have been holding up reasonably well in this market environment. Now, as of yesterday, and I'm sure David shared this with you when he did the video last night, but just in case he didn't, be aware that we are back to a strongly bullish posture on the NASDAQ Composite. And so that continued today naturally if we're hitting an all-time high right there. So we have a green moving average, which suggests price above rising moving average, and we have a green background color that tells us that the intermediate posture using the market forecast technical indicator is now back to strongly bullish. We're at 73 and rising there. So we're not quite in the upper reversal zone on that green line yet, but we're knocking on the door of it, and it probably won't take us too long to get there. Now on the Dow Jones Industrial Average, which is the chart kind of in the upper right here, you'll notice that we did briefly go to a weekly bearish posture. So remember, that's what I was mentioning to you guys on this candle here. I said, well, be aware that in all likelihood, either Friday or Monday, we would go to a weekly bearish posture. It just, when you have the momentum and you're that close to sitting on the 80 line, chances are very, very high. We even had a good rally on Friday, yet it still went to a weekly bearish posture. Well, we do have new information to share with you today. So after having Friday and Monday in the weekly bearish posture zone, we are now back to strongly bullish on the Dow Jones Industrial Average. The reason for that is the intermediate line has now turned back higher again. It was falling the last couple days. It switched to rising once again. And so similar to the NASDAQ, we're not all that far away from entering the upper reversal zone once again to the upside. Now, with the Dow Jones Industrial Average, notice it is not at a new high. So it is not the same as what we're seeing with the NASDAQ down below, and then also the S&P 500. So while all three of those charts have strongly bullish postures currently, it seems like at this exact moment, the Dow Jones Industrial Average is turning into a little bit of a laggard here, as the market has been more interested in more kind of cyclical and internet and technology-oriented types of plays here more recently, and is leaving kind of the blue chips in the dust for a few days at least. But it's not going to take much for the Dow Jones Industrial Average to get back to an all-time high either. So it's just a recognition of where we stand at this moment in time. Mentioned before that the S&P 500 did achieve its own all-time high here today. It was up 0.15%. And so that did beat the Dow Jones, which was only up 0.09%, but it did not beat the NASDAQ Composite, which was up 0.52%. So with the S&P 500, we just barely crossed above a couple of these candles over here that were giving us the overbought cluster signals a week or two ago. Whereas with the NASDAQ, it seems like it's a much cleaner push up and through the prior resistance area. So I kind of like that move that we saw right there out of the NASDAQ. And it's hopefully helping along some of those older school tech companies like the Cisco trade that I did the other day. Those types of companies tend to benefit when we have a clean breakout like this. So we'll see where that takes us, but right now I do like the way that the NASDAQ was able to kind of course correct after being a little bit more precarious a week ago underneath that moving average. All of a sudden we're talking about it hitting all-time highs and then blasting cleanly through resistance areas, and those are generally bullish features, so definitely happy about that. The S&P 500, unlike the Dow Jones and the NASDAQ Composite, never did have a weekly bearish posture along the way. So with the bounce back higher, the green line remains in the upper reversal zone above 80, and as you can see with the background color of the chart, the last time we were pink was back here at the end of July. So we've gone on a pretty extended run here from the S&P 500 without having a bearish posture along the way. We were very close to receiving that here a couple of days ago, but just like the NASDAQ, we do have 4 straight days there to the upside on the S&P 500, and it kind of bailed it out just before it was about to switch to a bearish posture. We had a nice rip higher, and that allowed the green line to kind of stay in the upper reversal zone there. Now, the final chart on the board here is the Russell 2000. That's in the lower right-hand corner. And as you can see here, we do have a weekly bullish posture. That light green background color is a little bit different looking than these other 3 charts. Notice those are dark green over here. This is a lighter color of green. You can also compare it to this dark green over here if you're just trying to get your eyes used to the difference between those two. And so right now, things are looking more promising than they were with us now having a weekly bullish posture. The last time we had a bullish posture would have been back here about 12 days ago. So, that's a good sign. However, as you look at these charts, I think one thing should be apparent, and that is the direction of the moving average. And as you can see, the moving average of the Russell 2000 remains in a downtrend. We know that because price is above this moving average. And just like up here, price is above this moving average, price is above this moving average, and price is above this moving average. So then why is this line yellow and all the rest are green? And the reason is because this line is still falling. So if there's enough bullish pressure to the upside, then that moving average, which is a lagging indicator looking at the last 30 trading sessions, will eventually curl higher as well. And when it does, as long as the price is still above it, it will turn green. But right now, we're not at that level, which brings up the possibility that we're still kind of in this congestion zone. We're not quite breaking free of some of those resistance areas. You can see where we stand right now in the Russell 2000 basically brings us back in line with this sideways behavior that the Russell 2000 had from basically the end of July until the second week of August. So it is possible that there's some sellers waiting in the wings there that will provide some supply to the market, and we'll see if demand can soak it up or not. But of these four, it does still appear to me that the Russell 2000 continues to be our laggard, but at least happy to see it back above its moving average, and that the intermediate line is now curling back higher. So at least some promising developments there with the small caps. Let's go ahead and take a look at our 3 green arrows status now, and this will be chart 4D. And as we pull this up, you can see we have some fairly good features that we're looking at here. 3 out of the 4 charts do have a 3 green arrows signal at this moment in time. We've got the S&P 500, we've got the NASDAQ Composite, and we've got the Russell 2000, all with green background colors there, telling us that we do have 3 green arrow signals. Now, the 3 green arrow signal was developed to assist trend traders, so we do have to remind ourselves of that. A signal can exist, but it might not fit the strategy that you're trying to implement, and that would be the case here with the Russell 2000. Despite it having a 3 green arrow signal, it's probably not going to be a good fit for trend trading because, again, that moving average is still declining at this moment in time. On the other hand, with the S&P 500 and the NASDAQ Composite, I have no doubt that you're going to be able to find some excellent trend trading candidates within those particular indices that would be a good fit for that particular strategy here. So at least we have more bullishness on the board here today than we did a week ago. And it's not that the Dow Jones is all that far away. They might complete the set, so to speak, and have 4 for 4 in the 3 green arrows territory here sooner rather than later. You can see the MACD histogram is rolling higher, and remember, when it crosses up and through the 0 line there, we would probably get our 3rd green arrow, assuming that one of the other arrows hasn't gone back to red by then. So we're not all that far away from having excellent breakout conditions here in the United States. And that's an interesting development, considering there was a little bit more nervousness in the air just a week ago in the market. And then just like that, snap your fingers, back to all-time highs, right? So very interesting, to say the least. Let's go ahead and take a peek over here at the internet real briefly. I always like to get a chance to say thank you to those of you that help support this free project called the Market Outlook. Remember, David and I do this on a volunteer basis. We don't want you to waste our time, and hopefully we're not wasting yours. So as long as we can work together, I think we've got a good thing going here. If you want to see David and I continue to do these videos, we just ask you to help support us on social media. It doesn't require any monetary investment on your part, just a little bit of your time. Probably takes you less than 5 seconds if you get in the routine of doing it the right way. So thank you to the 105 of you that did click like for me the last time around on Twitter. I'm always satisfied as long as we're getting up there in that triple-digit range, so I really appreciate all of you that took the time to do that. Also, earlier today, I did teach my dividend growth investing class where we focused on the energy sector, looking for some of those scooped up value opportunities after that particular sector has sold off in recent weeks. So feel free to check that out if you're a premium or a plus member up here on our trading rooms tab. And then David taught his directional option strategies class earlier today as well. Tomorrow morning, we'll be back in the saddle with my factor-based swing trading class at 11 a.m. Eastern Time, and then David will be teaching his options inventory trading class at 2 p.m. Eastern Time. Also, a quick little gander here at the sector selector. Now remember, this was put together as of Friday night, so it's a couple of days stale at this point. A lot of times that doesn't make a big difference. This time around it might, just because there's been a pretty jolting shift in just a couple of days here from what I'd mentioned earlier in terms of this market all of a sudden is seeking out risk in a big way the last couple of sessions, whereas last week had a little bit of a different feel towards it. So we did actually see the utilities and the healthcare and the consumer staples all going higher. And of course, those are all defensive areas. Those were the areas that were kind of laggards to a degree here today. whereas this market was being led more by some of the information technology companies and more of the cyclical areas that were out there. So remember that this will give us a general idea of trends, but things can happen in the meantime to change trends. So we have to always keep our mind open to that possibility there. But in terms of the leader from a sector perspective, as of Friday night, we would have categorized that as healthcare being the leader and energy being the laggard, even though, of course, today energy had a nice snapback rally today. But from a trending perspective, energy is still a very difficult chart to look at if you want to be long them. Of course, if you're short them, you're thrilled. And sometimes people will use this sector selector for that reason as well, right? A lot of times we use it in my class on Monday for whatever's working to the upside. But some of you might be looking for bearish setups, and for that you might use the bottom portion of the graphic there. So up to you, but remember you can always find that if you're a premium member on our website. Up here in the premium tools area, hover your mouse over tools and then click on, in this case, sector selector. All right, let's get back and do some more analysis on the Thinkorswim charts now. And let's do some 12 grid analysis starting with chart 5A. This is our asset class 12 grid. A reminder that the background colors of these charts will tell us what the current posture is. That's the intermediate posture using that market forecast technical indicator. Interestingly enough, we only have one pink chart on the board here. That just happens to be emerging markets. Now, like I hinted at a little bit earlier in the presentation, remember when I was with you last on Thursday, I was telling you how we had an overbought cluster signal on the emerging markets, and don't be surprised if we have a reversion to the mean rally higher. And that's exactly what has happened over the last 3 sessions in a pretty jarring fashion. You'll notice that EEM was up 2.27% today. Now, of course, the big reason behind that is what we just witnessed out of China. I mean, we saw eruptions higher in some of those Chinese stocks overnight. And China, as I mentioned on Thursday, is the biggest portion of EEM. So as China goes, EEM goes. And so right now, I would say that is a promising sign. However, this chart still has a lot of work to do. You despite a very, very rapid rally. Remember, a 2% move in like the United States, that would be newsworthy, right? That's a pretty big day. So we're not talking about a small movement here. This was an epic move higher across an entire asset class like emerging market stocks. So that is a very rapid ascent right there. But despite that, you can see we still have that dark pink background color. It's not even light pink. It's dark pink, telling us that we still have a strongly bearish posture with EEM. And of course, we still remain below a falling moving average right there. That moving average continues to be red. So it's not that can't change. It's just that you have to kind of go forward with assumptions. The way that I think of it is, my assumption is that when we start getting these oversold cluster signals, we will have rallies, reversions to the mean, like is the case today. What I assume is that those rallies will not change the shape of the trend and will eventually fall again. Now, of course, that's not always going to happen. There are actual trend changes that eventually do occur across asset classes. And so who knows? Could that happen in this case? Of course, anything is possible. But you do have to go into every trading decision with an assumption. And right now, my assumption is this has been an area of struggle for the market. A lot of people probably regret getting into some of those emerging market stocks over the last 3 months. And you're always going to have that overhead resistance of selling pressure for those people that want to get out. And so that's a lot for the market to fight against. And so right now, I would probably still proceed cautiously around EEM until we get better clarity on the chart, especially would need us to start trading above that moving average again. It's been a while since we've been able to make that claim. With the U.S. market and the foreign developed markets, there we're looking a lot better. Notice the background colors on those charts are dark green, and we have green moving averages as well. So we have more bullish supportive action out of those areas, whereas this is an interesting development in the emerging markets, but not necessarily actionable quite yet. Some of you might have been willing to throw your hat in the ring because of that oversold cluster signal there, but you're probably taking your profits already 3 days later, because that's a very rare move that we just witnessed right there. Preferred stocks also look pretty strong. You can see trading above that rising moving average, strongly bullish posture. We have Treasuries that did sell off here today, so these are government bonds, they rolled over in a risk-on market environment. Remember, that's fairly typical. When we have a risk-on day and it feels like the economy is booming, then you oftentimes see folks selling bonds and pushing money into riskier assets. So bonds were down in price and up in yield here today. The 10-year Treasury yield did close at 1.29%. Bitcoin did sell off today, but they've been one of the true bright spots of the market over the last 3 weeks or so. So I think we can cut them some slack. They didn't necessarily participate on the upside here today with a lot of the other risk assets, but because they've already had so many built-in gains in recent weeks, they're probably just trying to digest those gains here. So things still look pretty reasonably strong there in the Bitcoin market. You can see that oil prices rallied strongly. You can see that oil just here on Friday had an oversold cluster signal. So it was one day after emerging markets had their cluster signal, but we had the same effect. Here's our snapback reversion to the mean rally on oil. Yet in this case, we remain below that falling moving average. So we're still in more dangerous territory there. What does separate oil from the EEM is that we do have a weekly bullish background color there. So at least that is a more promising development with oil, but I'd still like to see a little bit more constructive activity there on the charts. And like I mentioned on Thursday, we have been seeing high yield bonds highly correlated to oil prices recently. And once again, we're seeing that. Notice that rip higher the last few days on oil. Well, we had the exact same rip higher there on high yield bonds. So another example of high yield bonds, junk bonds were up today. Higher quality U.S. government bonds were down significantly today. So, we had that conversation before, but in case you missed it, a lot of the companies, the corporations that issue high yield debt are considered to be part of that energy patch, some of the areas within the economy that have struggled the most in recent years, and they have nowhere else to turn but to raise high yield debt. And so you do see that when oil prices rally, that usually helps the high yield bond market because it makes participants feel like those corporations are going to be more credit worthy if oil prices stay higher, so they can afford to pay the interest on their bonds. Gold prices are fairly flat here today. They are holding above the flat moving average, let's call it. So we have a strongly bullish background color. So the posture is back to bullish with that rising intermediate line. But you can look at this chart and you can see it's not really going anywhere. So we don't have a lot of directional activity out of gold. I don't know if I want to make a big bet up or down on gold at this moment in time. I kind of want to see how things develop in that particular area. And then the US dollar was down for the third straight day. In terms of sectors now, I mentioned before that energy was the leader today despite being a laggard from a trending perspective. So you'll notice that energy was up 1.66% today. That did lead all sectors, but this is the only chart on the board that has the dark pink background color, telling us that we still have a strongly bearish posture. In other words, this is our worst looking chart on the board here, despite being leader today. So you had kind of a dead cat rally, so to speak, after having that oversold cluster signal here on Thursday. 3 straight days to the upside on energy, but we're still below that falling moving average. So you got to be a little bit more cautious with that one. And as I mentioned before, it was kind of the defensive areas that struggled a bit more today, where we had the consumer staples down 0.76% today. Real estate was really close to that as well, down 0.75% today. Both of those have gone, by the way, to a weekly bearish background color, and that was not the case when I was last with you on Thursday. So that is a more recent development. Both of them are still above the rising moving averages, so that's a good sign. But there is a little bit more wear and tear on the charts here more recently compared to some of the other areas out there. Healthcare is still holding up. I mentioned before that healthcare was down today, but you look at this chart in comparison to the staples and real estate, and it looks to me like healthcare is still a leader within this market. Discretionary is now back to weekly bullish background color. Not that this chart itself looks all that noteworthy, but just wanted to simply point it out because it helps me segue into our trade application example here for tonight. So let's get into it. I'm going to come over here and I'm going to use chart 1A. which is that trend trading chart that I had mentioned to you guys previously. We use it in my Monday top-down trend trading class. And I wanted to pull up a discretionary stock in the gambling space. This is one of the newer companies there. This is called DraftKings. For those of you that are fantasy football fans, as I am, I've got my draft coming up here on Labor Day. Excited about that as always. You'll know the name DraftKings. DraftKings is right up there with like FanDuel and a few of the others that have really catered to the fantasy football and other leagues as well, basketball, baseball, and what have you. And of course, now with the legalization of sports betting in many states in the United States, DraftKings is right there in the mix with that conversation as well. Well, it caught my eye here today because it's actually giving us a 5 green arrows signal. That background color on chart 1A will tell us that. If it's green, it's got a 5 green arrows signal, and it just occurred here today, which is why up here in the label it says it's fresh. It says 0 days and 0% because that doesn't start until the day following the signal. So those numbers will start changing as soon as tomorrow on DraftKings. So that was one reason it caught my eye, is just that it gave us a recent fresh signal. But in addition to that, it kind of gives me the impression that it is giving us kind of an inverted kind of a reversal type of a signal. I don't know if you'd call it an inverted head and shoulders or what, but you can kind of see over here, you might be able to call that like a left shoulder. This could be a head, and this could be a right shoulder. And you can see here we're now breaking out easily past the neckline to the upside. So this is a bullish reversal pattern is what we're looking at here. And where we ended today, we closed at 56.47, and the high over on this candle back on June 9th was $56 even. So we closed 47 cents above the prior resistance area, and we are now trading back to the highest levels since early May all of a sudden, as we're about to embark upon the NFL season, where supposedly there'd probably be a lot more sports betting going on here sooner rather than later. Now, this one has not been an outperformer. You'll notice that the S&P 500's purple line is well above this price candle. So this is not necessarily a trend trade in this case. This is more of a kind of a swing trade of sorts, where we're kind of testing the field, so to speak, and see if it can play a little bit of catch up here along the way. And so what I opted to do in today's case was to do what's known as a long call vertical spread. Now remember, the trade is already done. It was done during the market session today. So for those of you that are premium members, check our Telegram app for the fill prices and the expiration dates and strike prices and what have you. But I believe what I did was I think it was the October monthly contracts, and I did the 50 by 60 long call spread. So I bought the 50 call, I sold the 60 call to create that spread. And what you're hoping to have accomplished there is a directional trade to the upside. So unlike a credit spread, where oftentimes we're satisfied with just watching the stock go sideways, in a debit spread situation like this one was, we do require the stock to make a move. So I want this stock to get up here to $60 or higher on the expiration date of October contracts. If that is going to happen, then I have a chance to make a fairly reasonable risk or a return on my risk that I'm taking with that trade. Another aspect of this particular trade is that it is risk defined. Right? We're not just only selling a call where it would be naked and we would have troubles to the upside. We also own a call as part of that spread to offset any risk to both the upside or the downside. So that's another nice feature of these types of spread trades, is that you know what your worst case scenario is going into it. With a debit spread, your worst case scenario is that you lose the money that you paid for that spread. But that's the nice thing about options, is you can leverage your money much more so than is the case in the stock world. So kind of an interesting chart that we're looking at here, where there's elements of a bullish reversal taking place in addition to this particular company's prime time. Think of this as Christmas for a retailer. Right on the cusp of NFL season for a sports betting company seems to be an interesting side comment in addition to the positive elements that we see here on this chart with the 5 green arrows and the breakout signal. So that's what I had for you here today. I hope you enjoyed the presentation. If you did, I ask one simple thing out of you. Just click like for me there on Twitter. If you didn't like the presentation, it's fine. You don't have to do anything on your own either, and we'll get that point. In the end, as mentioned before, we do these voluntarily, and so we assume that you enjoy them and want to make sure that we're giving you some good opportunities to learn along the way. Obviously, if we can't do these videos in the future, we're still running our premium business where we're teaching all day long, and so would invite you to join us there in our classes if you have an interest in that all week with our 10 different classes that David and I teach. So thank you for tuning in here this evening. David should be back with you tomorrow night, and then I should be able to see you on Thursday. Until then, I want to wish you all the best of success with your trades and your investments. Goodbye for now.